So today on Sterling SBA, we're going to be meeting with a good friend of mine, Dario Loayza. Me and Dario go way back to when we were in the trenches together, AKA the cubicles. So today we're going to talk to him about conventional lending.
Part of the game, they running 5 drills. I'm off for the chain, and I'm hot still. Looking like Scorpion, get over here. Been some people trying to relate, ain't close to here. Think it ain't a sacred place, you done misinterpret. Relationships just ain't been worth it. Fool if you think when I don't post, I ain't working. Never too close, I know no things certain. I walk in purpose, float on surface, fly in person. There's some stuff you gotta be birthed with. Leaving my mark in curse.
Dario.
Hey.
Thanks for coming out today, man. I appreciate it.
Yeah, thanks for the invite.
Yeah, of course, man. No, it's my pleasure. So obviously I know you. We have a long relationship. I've known you probably almost 10 years now.
Oh man, it feels like 20.
We were in the trenches together, by all means.
Oh, sheesh. Good times.
Yeah. So, but for people who don't know you, tell us what you do.
Yeah, great. So my name is Dario Loayza, and I'm actually a commercial banker over at Valley National Bank.
Awesome. And so as a commercial banker, what does that role entail?
So it actually entails a lot of different things, but at the very core of it is really sitting in the middle of the client relationship and making sure that the client or the borrower is able to access all sides of the bank, whether it's credit, getting a loan, or whether it's the retail side and they need a deposit account, making sure that they can get all the products and services they need to run their business.
Awesome. So obviously you're really a liaison, right? I mean, you talk to the client and then you go and talk to the bank. So you're really the bridge between the commercial customer and the bank internally.
Yeah, that's correct, right? So I'm advocating for the bank. Obviously I work for the bank and want the bank to do well, but I'm also advocating for the client and really trying to sit right in that middle, being a trusted advisor.
Sure. So how do you find that balance? Because that's always a tough thing when you're a salesperson, right? Is that obviously, you want to hit goal, right? You have a number that you're trying to hit every year in terms of loan production, but
I'm trying. I'm trying, yeah.
And I know you've been successful pretty often with that.
Some years are better than others.
So how do you balance, being a good liaison in terms of, advocating for your customer, but also protecting the bank?
So that's actually a really good question, and I think it's really tough for new lenders to find that balance. But at the end of the day, as you grow up in your career and as you gain more experience, the balance is easier to hit once you understand what your bank truly wants, right? And once you understand what your bank truly wants, you can bring in the right clients and you can convey to them the right products and talk to them about things that make sense for them and make sense for the bank. One of the worst things a commercial lender or banker can do at the beginning of their career is really fight with the bank, right? And that's when they're starting to get pretty stressed. They're getting nervous about their production, and they're putting the wrong clients inside the bank, and that's never gonna translate into any type of success.
And I believe you taught me this phrase. Maybe I'm giving you too much credit. I don't know. But
oh no! Here we go.
It's just because you need a deal doesn't make it a deal.
I don't know if I taught you that phrase, but I definitely believe in that phrase, yeah. Again, I just think people try too hard and push the wrong type of products onto either the bank or onto the client, and that's when you really don't see any success.
And just to be clear on what that phrase actually means, it means that just because you as a lender may need a deal because your pipeline's light, doesn't mean that it's a good deal for the bank, okay? The bank's credit appetite is not predicated by your lack of a pipeline, nor should it be.
Yeah, I mean, listen, we see a lot of deals, and they're not all deals that should be done.
Sure. And
definitely not all deals that should be done at my current institution. And so definitely, yeah, just because you need a deal, you can fight all day you want, but you're just going to make your bank mad, and just as bad, you're going to make the client mad.
Talk to me about the importance of a banking relationship and actually working with a bank or a lender that actually understands your business, doesn't just look at it as a number.
I think it's very important. In fact, I think it's one of the most important things that a business can do is build that relationship with their financing partner so that they have the ability to capitalize on any opportunities that come up.
So a lot of the businesses, I think sometimes they only think about the rate, right? They shop around town and they say, hey, this guy is 25 basis points less than this guy, but why are they sometimes maybe missing out on the relationship aspect by taking that cheaper pricing?
I think a lot of it just comes down to inexperience, right? If you are a relatively new business or you're not that big, you're really used to the consumer side of it, right? I need a car loan, or I need a credit card, or I'm just gonna go get a house. They don't actually realize that their business is gonna need this ongoing financing every single year. And they're gonna need the flexibility of a relationship, a banker that truly understands their business.
Yeah.
As businesses grow, they start realizing that more.
So what you really need is you need a bank that will back you, a bank that trusts you, a bank that understands what you actually do and why you have the need for the capital that you're asking for, right? Because as you said, hey, maybe you go to this guy and he's 25 basis points less right now, but maybe that's the only loan he's gonna give you. And you need a loan every year because your fleet's growing or you need working capital or whatever it is. So sometimes it's better to go with the place that's going to give you a true banking relationship.
I can't agree more. Yeah, I think that is the most important thing, is to develop some type of relationship to make sure that your entire business can get served.
So when a business is coming to you for a loan, what key financial metrics are you looking at to determine their eligibility?
So it really depends on the type of loan they truly need, but at the end of the day, the base thing they should be focusing on is their cash flow generation.
Okay, so debt service coverage ratio, that is the first thing.
The ability to repay your loan is the absolute first thing that a business should worry about,
Yeah.
and the first thing any banker is going to be really analyzing.
Okay, and so when you're talking, cash flow, what we're talking about, debt service coverage ratio, that's basically your EBITDA, right, which is your earnings before interest, taxes, depreciation, and amortization, right, divided by the debt payment, right, and that's going to give a ratio.
Correct.
And
yes.
then, so typical ratio, what you want to see, 1.2 or higher?
1.2 or higher is typically what we want to see on most of the loan products.
Okay, and what's the lowest you'll go?
The low, I don't know if I want to put that on camera, but for some of our not-for-profit customers, we'll go to a 1-to-1 ratio.
Okay.
And then of course, there's some very specific loan products on the commercial real estate side when you're dealing with tenant credits such as Starbucks, right, or something like that, where maybe that ratio will go a little lower. But at the end of the day, if you're a real business, an operating business, you're going to want to focus on that 1.2 ratio.
Okay, and obviously it's one of those things where the higher the better.
The higher the better, yeah. Including rate, yeah,
Including
for the banker, yeah.
Exactly. Yeah, I always charge prime plus 3%, so, I don't know anything else.
Oh, that's little kid stuff, man. I'm in the usury act. I'm at 18%. Yeah.
So when a business comes to you and they're looking for financing, what are they going to need to provide you with so that you can make an initial decision on eligibility for financing?
Yeah, so that's a good question. At the bare minimum, for a company to come in for financing, they really need to be organized on the financial side. And what I mean by that is they need to be able to provide their business tax returns. They need to be able to provide their interim financial statements, their P&L and their balance sheet, and then any other specific reports that pertain to their business, whether it's an AR aging report, an AP aging report, and definitely their schedule of business debt.
And let's touch on the tax return part of that, because I think that that's something that maybe borrowers don't always understand, how important the tax return is to the bank. If somebody is out there and they're playing that game where they're trying to save a little bit of money with Uncle Sam,
right? Yeah.
How does that look to a bank when they're looking at the tax return?
So I always tell people, listen, I'm not the IRS, right? And I'm not here to get you in trouble, but you can't have it both ways.
Yeah.
If you're writing everything off and you're appearing like you don't make any money, you have no ability to service my debt. Right. So at some point, you have to be showing some type of net income or some type of cash flow generation for the bank to get comfortable to lend money.
Because what we can't have is a situation where you say, hey, here are the real books, here's my internals, here's my QuickBooks, and all of a sudden it's $500,000 more in cash flow than what you're showing on the tax return.
Exactly. I didn't know we were going to make this personal about you, but yes, but yeah, we can't have those type of funky books.
And that's why I can't get financing to this day. So Dario, now you've been in banking, for how many years now?
Oh man, I would say 11 years now.
11 years now, so over 10 years in banking. But how did you actually get into banking in the first place? Because I know you were a wild guy back in college, man. You were like Van Wilder.
I don't know if I was that wild, but I got into banking just through a friend, really a connection.
Yeah.
So very similar to yourself. A buddy of mine had already graduated and was working at a bank, and they had a spot for an intern, and so he suggested I applied, and that's how I got in.
Got it. And so for somebody who is looking to get into banking or SBA lending or whatever it may be, what advice would you give them?
So at the bare minimum, I would say if you're still in school, maintain decent enough grades.
Yeah.
I would say it's not nearly that important, but you probably should show some aptitude for banking. What I mean by that is take an economics class or take a finance degree or an accounting degree, something like that, and so it'll pop on a resume as opposed to some liberal arts type of degree.
Sure.
And then I would just say apply. There's a lot of entry-level positions in banking, and the industry needs young talent. That would be my recommendation.
Well, I can tell you, if grades solely got it done, I wouldn't be here. So.
Yeah, me neither, unless they're counting withdrawals.
Yeah, exactly. So, so again, you've been in banking now for 10 years. I mean, do you want to stay in banking for a long time? Is this it for you, or are there other things you want to go on and do, or what are your plans long term?
Yeah, I think that's a great question. I think with banking, it's a great industry to be in. It's a great way to stay connected to the community. And I feel like I'll be a lifer. I really enjoy the work that I'm doing. I really enjoy the people that I work with. And so I think I'll continue to stay in banking and help as many people as I can. That being said, it's another easy industry where you can do kind of your side hustles, right? And you can do things that also interest you. And so it's a great way to pair both.
I've always thought that one of the beautiful things about working in banking is the fact that you get to see how so many different people make money. And so, you all you do is you talk to business owners all day and you analyze businesses all day. And so you see how this guy makes a widget and it can make him this much, or this guy has a service-based business and it's making him this much. So, it's a great way to build knowledge on business in general. And then it really gives you a platform where, you have decisions, you have flexibility. You can either stick in banking, and stay in there long term. There's great benefits of working for a bank as well, right? Or you can say, hey, I want to go be an entrepreneur and I want to go out on my own. And, you are a great example because I've seen you do both, so you obviously work inside the bank full time and you do tremendously well there, but you're also a really big investor as well.
Yeah, I think you hit it right on the head, right? You can be, in your case, a little peeping Tom, and in my case, a little bit of a voyeur, where exactly, if you're in banking, you see how people are making money.
Yeah.
You see what people are making. You can see what people are paying rent in different parts of town. You can see the type of cash flow different type of industries and different type of companies can generate. And so I think it's a great way to look inside a bunch of different opportunities and really figure out if banking's not for you, which opportunity you can go into.
And a little known fact about Dario is actually part owner of a soccer team. So you actually, I'm not sure, was I not supposed to share that? Is that public information?
I think it's a football club.
It's a football club, excuse me. Yes, it's in Israel. So,
but it's a very, very small part owner. I mean, like,
hey, if you're an owner, you're an owner, man. If you were there, you'd be in the owner suite.
There's one blade of grass reserved for me.
When should you be using a line of credit versus using a term loan?
Great, another great question. A line of credit versus a term loan is really going to be based on the use of funds. Mm-hmm. And so you're going to really ask yourself, what am I going to use these funds for? If you're going to be hiring an employee to generate additional opportunities, a line of credit might be the best fit for you because it's your working capital. If you're going to be buying a long-term asset, such as a truck, a term loan is going to be the best fit.
And the way I've always explained that to people as well is, a line of credit is usually for something within your cash flow cycle that produces a deficit, right? So let's say you have to order something from suppliers and you need a cash outlay, then you're selling it to your customer, but it's taking them 30 to 60 days to pay you, but you still have to buy more from that supplier previously. So there's a cash flow deficit there where you need to be able to draw on a line. And then once you receive that money from your end customer, at that point you pay the line down and then you get to keep your profits.
Yeah, I think you hit the nail right on the head. A line of credit is used for short-term uses versus a term loan where it's long-term uses.
So here's the question that I always get, and that's how long it'll take. Now I know
For
that
loans. Right? For loans. Okay.
For loans,
for
yes,
loans. Okay.
yes.
All right.
We don't want to go the other way. That's going to be a long.
Making sure. Okay.
So let's say you wanted to buy a commercial building. How long would that take?
On average, I would say a good timeline for a commercial building purchase is 60 days.
60 days. Okay. How about for a line of credit?
For a line of credit, depending on the complexity of the business, I would say 1 to 3 weeks is probably realistic.
3 weeks for a line of credit. That's a quick turnaround.
It can be.
So explain why the difference in timeline between those two products.
Really, so it boils down to due diligence. For a line of credit, I'm looking at your financials and the bank is making some type of credit decision, but we don't have to go anywhere, right? I don't need a survey, which I might need on a commercial real estate property. I don't need an appraisal, and I don't need an environmental. The bank can go really quick on most things. It's really those third-party due diligence reports that are slowing us down.
And then the other thing is the customer, right? So
Definitely.
I always tell people a lot of how quickly we can move will depend on you and how hungry you are to get information in when it's requested.
That's absolutely true. At the end of the day, this is what I do for a full-time job, right? So I know what I'm doing, I know what I'm looking for. It really dependent on the customer, whether they're doing it internally or they're going out to their CPA for documents to be able to supply the needed document.
So what advice can you give to a customer in terms of negotiating pricing and terms with a bank?
Wow, you're really gonna make me give out all the secrets today, Sterling. The best advice I can give to customers to negotiate with a bank is to build a relationship. At the end of the day, if a banker can get comfortable with your business and can get comfortable with you personally, they're going to want to do the best for you and the bank.
Gotcha. So maybe take you out for dinner and a drink first.
Dinner and a drink first, no doubt about it. Yeah.
Yeah, no, I think that that's a really key point there. You know, I love working with repeat customers. You know, and I rather, you know, cut rate for a guy that I know is going to come back and work with me and knows that there's also challenges inside the bank that I'm going to have to overcome as well to potentially work with him. You know, if we're both flexible and we can both potentially work together long term, I mean, you know, a couple of basis points here or there, I mean, what's the difference really?
I totally agree. You know, at the end of the day, Sterling, you and I are trying to get paid back.
Right.
Right? And so we need to be doing business with people that we're comfortable with and people that we trust. And people that we're comfortable with and people that we trust, we want to give them the best pricing.
Have you had any deals go bad yet?
Have I had any deals go bad yet? Can we cut this?
Should I say how many?
I've had deals go bad that I've had to work with that have been put in my portfolio.
Oh, so you're blaming the prior lender.
So I'm blaming everyone else other than me. But yes, I actually have had a deal that I originated that has not performed as expected and has gone bad. Now, fortunately, in this particular instance that I can remember, we were properly collateralized. We took real estate. We were properly margined, which means we didn't go all the way on our loan to value.
Okay.
And so the bank was well protected in the worst case scenario, which ended up happening.
So you guys actually did have to foreclose on that property, take it back and liquidate?
Correct, yes, we did, yeah.
So talk to me, what's that process like? I mean, obviously a borrower stops performing, they stop making their loan payment. I mean, they're 60 days past due is usually when that process starts to happen. What is that like from your end?
So from my perspective at my bank, where I believe we're more relationship bankers and not just hunters finding a deal and moving it off to another portfolio management group, it gets pretty intensive and it's a lot of work. And one thing that I always try and focus on is if you're doing good deals, you're gonna work less. If you're doing bad deals to get a deal done, you're gonna work a lot harder, right? Whether you're calling this person to get real estate taxes paid, whether you're calling them to get the loan paid or whatever it is, it's a lot of work. And so the main goal is to do a deal that's really clean. But at our bank, once it gets all the way to the end, as far as a bad loan, we have a specialized division that we send it to, and they're really the experts on having it work out as advantageous for the bank as possible.
So you don't have to actually go out and personally collect?
No, my days of breaking knees are over.
You retired the baseball bat a long time ago?
I retired that, yeah, that's sitting in the corner of my room. So I'm not actually personally collecting it. But again, we have a very specialized team of lenders inside the bank that their job is to maximize the return to the bank once things go bad.
Tell me about the process of getting a loan. What does that look like in terms of stages from the time that you initially speak to a customer to the time that you're at closing?
Yeah, so it really depends on the loan product, but there are some main key categories for the process. One of them would be document collection, right? At the end of the day, the banker needs to reach out to the client and tell the client what they need from a documentation support, whether it's tax returns, financials, or a PFS. And then after that process is done and the banker has analyzed the financials, the second part of the process would to put it in the credit underwriting. In credit underwriting, the underwriters will pick it up, analyze it, and there they'll make a decision, do we want to move forward or not? If we get an approval at that point...
That's usually where your deals stop.
That's usually where our deals stop. I'm not even getting the phone calls, the initial phone calls, yeah. But yeah, so if another lender is working on it and that deal it gets an approval, yeah, that will move into our closing/documentation process. Yeah, so it really breaks down into those three things. The main thing that the borrower would have to focus on is the documentation part, that first part. Really then it's up to the banker and up to the bank to take it to the finish line from there.
Got it. Okay, so I was going to ask you, what is the most important part of the process from a customer standpoint? It's the document collection?
I would think so, yeah. Again, it's kind of a barbell, right? So the easy part for them is credit underwriting, where it kind of goes off and they don't have to deal with it. And there's going to be a lot of heavy lifting on the closing side, right? Whether it's getting life insurance or whether it's getting a zoning verification or some type of tax transcript. But really the heavy lifting on the borrower is going to be that initial thing, making sure that the banker understands the business, making sure that the banker has gotten all the documents that they need to make the best push for an approval.
And you'll have somebody internally that handles the closing process primarily for you?
Yeah, at our bank, our closing process is divided into our documentation team and then our closing team, which is handled by our lending assistants.
Attorneys?
If the deal calls for it, that documentation process will be handled by attorneys.
Okay. Mm-hmm. Talk to me about the offshore closing thing, because this is something that conventional lenders get to do that SBA lenders never really get a chance to do. What's the thought process behind going, a mile offshore and signing docs?
So it's not a mile offshore. If you're doing that, then you're doing something illegal.
Oh, okay.
But yeah,
I don't know.
I believe it's 9 miles offshore. But what happens here in the state of Florida, because we don't have a state income tax, is we are paying doc fees on our loans. And so on anything that is real estate secured here in the state of Florida, you're going to be paying doc stamps. There's no ifs, ands, or buts. But if you're doing some type of unsecured lending where you don't have collateral that's real estate here in Florida, you can go offshore, whether you go to a different state, you go in the air, or you go on a boat, and you can sign your loan documents offshore, bring them back to the state of Florida, and then you won't have to pay those documentation stamps.
Interesting. You ever find anything out there when you're in the water?
Nothing that I want to put on camera.
Well, Dario, thank you so much for your time today. Thank you to Grand Cathedral Cigars for hosting us today, and I look forward to more continued success in the future from you, man.
Thanks for the opportunity, Sterling. Be sure to like and subscribe to Sterling SBA.